Good morning, everyone, and welcome back to another edition of Bleeding Crypto's 10-minute BTC update. Before I begin, I have to give you my disclaimer to protect myself legally from all the crybabies. So here's my disclaimer. I am not a financial advisor. This is not financial advice. I am wrong 99.9% of the time. So if you follow me and you use real money, you have a 99.9% chance of going broke and losing it all. So do not do anything I say. This is for entertainment purposes only. Consider this game theory. That is about the ironclad disclaimer that I could probably, anybody could probably use. All right, guys. So let's talk about what happened overnight. So yesterday morning, I gave you guys an update and I told you guys that what I wanted to see is a bounce off the continuation fib. I don't care about wicks. I care about candle closes, and that's exactly what we did. We had a nice bounce off the continuation fib into that fair value gap I told you guys, and that's exactly where we filled in. Candle bodies filled that in perfectly. Now we rejected off the 4-hour 50 EMA, which is not something that's very uncommon. If you look to the left, you know that the 50 EMA on basically all time frames, well, some of the major time frames like the 4-hour, the hourly, 4-hour, and daily, they seem to have a very strong reaction, whether it's a resistance rejection or a support bounce. You get those around those 50 EMA. So I tend to follow them quite closely. So now that we got our bounce, we got the fill of the fair value gap, what now? Nothing changes, guys. This is why I love TA. It's a very disciplined movement, like I mentioned yesterday. Even though to some people they don't view it that way, I'm going to help you try to understand it. Now, again, this is not going to be a teaching update. This is going to be more of a just a bare bones price update. So you'll have to excuse me if I get into a tangent sometimes, because I'm always in the habit of teaching people. I'm going to try to break away from that habit. I do that for my Discord, not for what I'm trying to do here. So let's move on to what my next course of what I'm looking for. Basically, I take my fib, go here, and I'm looking for the same thing. I'm looking for a second. And we're already, you know what, let me do this. I like putting these exact. It just drives me crazy. And I just I like having them exactly to that's my OCD. And there we go. Okay, perfect. All right, we're almost there. We're almost to that 382. Actually, just so you know, this to me is already hitting a 382, even if we don't hit it to the penny. And here's how I view, or how I use the fibs, better said. If something is within the 50%, right here, no, excuse me, I grabbed the wrong one. This one here. If something is within the 50% of the prior fib, so 236 being the prior one, if it's halfway or lower, it's already hit the bottom one. When this gets past this line here, that's 0.50. And so forth and so on, just so you understand. So for me, we already hit the 382. Doesn't mean that it has to bounce from here, but what it does tell me, at least in the short term, that we are respecting the continuation rule. Now, obviously, we could go to the 50 just like we did here, and then see that bounce. What I don't want to see is on a second on a second bounce, because this is the first bounce. On a second bounce is to go into this here, into the reload zone. If we go into the reload zone, then it shows weakness of follow through. Because remember, we are in a downtrend. We are trying to prove to the market that the bulls are in control. So in order to do that, you have to have a nice strong exit out that gate. Think of horse racing. You know, you want a nice strong exit, nice dominant, show that you're in charge, show that you're the good horse you should have betted on. Well, that's what we're trying to do here. So if we start showing weakness soon after getting out of the gate, it doesn't look very well for the market to have confidence that we're going to continue, and then you may start seeing some sell-off. So I'm really hoping that we hold on to this continuation rule. But let's say we don't. Let's say we come down into the 618. Can I find confluence for a support in that area there? Well, let's do this. If you ever want to find confluence within your EMA, within your fib, all you have to do is go to the point 618. Here I am trying to teach again, damn it. Anyways, and you run and you snap a line and you look left. Is this strong resistance? Resistance, support, yes. Support, yes. So because it has a nice defined area of support and resistance, if we do break through the continuation rule and we activate the reload zone, then at least we know that this is going to be a strong area of support here for a possible bounce. Now, typically when we come into the reload zone, we don't bounce like we do here. We tend to consolidate. Another reason why I don't like it, that we're not going to get that strong reaction. Though it's okay, let it catch its breath and look for the next target to the upside. So let's talk about a couple of scenarios. One scenario is obviously my main scenario is going to be a bounce from here. If we bounce from here, then what? Well, then I'm looking for the daily 50 EMA. And I'm going to do this. I'm going to put this on the chart. I'm going to keep it here. I'm going to put this in white to mimic the white of the 50 EMA. And then we're going to make ourselves some notes. This is the 50 EMA on the daily time frame. Perfect. The why this helps us is that when I go to the hourly time frame, I know where my next goal is. And look, we have confluence with the 300 EMA on the hourly time frame. So that's a really good area. That's the last EMA for us to hit on this next, if we get this next bounce, which is typically a good resting point. When we've blown through all of these, it takes a lot of strength to do that. Typically when we hit this, we see a little bit more of a downturn before the next move up. And if you want to learn this, all you have to do is just go look left on the charts, and you can see the reaction. Once this becomes support, how it is. Once it becomes resistance, how it reacts, and what happens when we have a deviation. What happens when we lose it? We back test it, and the reaction that we get from that. But again, this is not a teaching lesson. This is more for price action to give you an idea of what the next move, what I'm looking for on the next move. I don't know what the next move is, but I have a system that I use, and we're going to be testing that system to see how accurate it is. If you want to learn this system, that's what my Discord is for. That's kind of what I'm trying to say. So I'm trying to get in the habit of teaching. So let's go ahead and move on from here. So if we don't bounce off of this continuation fib into this daily 50 EMA, then the next thing I do is I go here. We're going to look for this. That'll be our next area that I'm looking for us to hit, consolidate, and then move up. Okay, that's the bull case. What's the bear case? The bear case is if we come back down and we break this higher low, that changes everything. Okay, so let's do this. I don't want to put too many things on my chart, but this is a very important point. So I'm going to use it here, right here. I don't want to break this. If we break this blue line, the bulls have lost control of the little gain that they've made, because this is a gain. This is a nice proper market structure. This was a nice right here on the. You can see a bit on the 4 hour. We had a nice bounce, respected the higher low rule, bounce from there. We want to see that follow through. Break here, and we're back at that area where they started to gain control, but gave it up to the bears. And then we can start looking for lower targets or even consolidation back in here to see if this proves that support. This is the 100 EMA on the daily time frame. So let's go here. Here's where we bounced. Here's where we ultimately bounce off the 100 EMA. So just for the purposes of being able to have a visual when we go to the lower time frames, I'm going to do the same thing. I'm going to put this in gold. I am going to then put 100 EMA daily. And we have two areas that we're looking for. We have two areas that's really important for us to reclaim. We want to reclaim the 50 EMA on the daily time frame, but we don't want to lose the 100 EMA on the daily time frame. So at least this keeps us in a reasonable time frame. And what I mean by that is often people, when we have a small move up, they get too ahead of themselves. We're going to all-time high, and vice versa. We lose a small little area. Oh my God, we're going to 47,000. We're going to 44,000. But they lose the fact that there's So many things that can happen within a small structure that's going to lead up to that. So how are we going to lead into oh shit, we're already 10 minutes. Damn it. All right, I'm just going to finish my thought real quick. How would we lead into this, losing this? Well, by staying in the smaller time frame. Now, remember, guys, I'm a day trader, so I look at things in the smaller time frames. If you're a swing trader, you probably don't want to look at these videos because they're not really going to help you. I'm a day trader, so I look for the smaller signals on the smaller time frames to give me an idea of where the bigger time frame moves are going to be. So, like I said, let me just finish my thought here as what I was saying about staying in this lane here. On the 4-hour time frame, it's simple. We break below here. There's a good chance that obviously we're going to come down into the daily 100 EMA, which then poses a huge threat that if we break below it, like we did here, but we back test it and we reject, chances are we're going down. Vice versa. If we come down into here, we're already looks like we're breaking the continuation rule. No, not yet, not yet. So if we can bounce off of here, and we grab up here, whether it's the continuation roll or the reload zone, and we get up here, same exact thing. We need to reclaim it. We need to reclaim this on the daily time frame. Well, I look on the smaller time frame for the reclaim. So just keep that in mind, guys. So if in case you're confused, I'm trying to teach you my way of trading. I put these markers here so that when I go to the lower time frames, I'm not looking for a back test on the daily time frame because often the back test will happen within that candle. So what I mean by that is, say for instance, we get a green candle, all right, and then we come down to here and another green candle, and you're waiting for a back test on a high time frame. Well, when you go down to the hourly time frame, you may already see that structure happen. We may see that green. And then we come back down, we put a W, a bullish market structure, and then we continue. And then that candle closes somewhere here. The new candle opens and continues, and you're still waiting on the daily time frame for that back test. It already happened. That's why it's important for you guys to understand the different relationships between the smaller time frames and the higher time frames and what to look for and how to use those time frames to your advantage. So this is high time frame is to make the plan. We have the plan. The plan is to get above here, and if we go below here, we know what to do. Now within that plan, we have the setup. The setup happens inside of here. And as you can see, it is a disciplined move. I've already gone in a couple of minutes over it, but I had to give a detailed explanation on this here. Again, they will get shorter, and I will keep them shorter, but I need you to understand my style of trading, so I had to explain that last portion. Look, we're already breaking. As long as we don't close below here on the hourly time frame, we're okay. Well, more like this. I'm sorry, on the 4-hour time frame, because this is where the bounce was. We can still get a wick like we did here. If we do, then that gets invalidated, and we switch to here. But I'm not going to switch it just yet because I need you to understand there's a time and place when you switch it. Now is not the time. This candle still has 2 hours and 40 minutes to close, so we have to leave that on there. We have to leave it on there. All right, guys. Tomorrow morning around this time, I'll give you guys the result of what happened. We'll be able to see which one of the two plans played out. Were we able to hold the higher low, whether it's a bounce from here, that's ideal, a consolidation and then a move up, not ideal, but I'll take it, or did we break below the blue line? That's what we're going to find out tomorrow, guys. So stay tuned. Please subscribe. Please hit the like button, guys. I'm trying to gain my momentum on the YouTube channel, on my channel. I'm going to do these. Like I said, I'm going to do my best to do these every single day. Give you guys a quick 10-minute. I apologize if I go over. Sometimes I just have to explain myself a little bit more in detail because I don't want you guys to get lost. I know what it is when you don't understand TA very well and somebody blows through this very quickly. You tend to get discouraged from TA. Technical analysis, yes, it may seem difficult, but once you understand it, once that light bulb clicks, it becomes something that I have a great passion for. I absolutely love it. It's a very validated feeling when you get to understand it, and doesn't mean that you stop learning, but it is a really good validating feeling, like I said before, on wanting to learn, open up that hunger, that appetite, that love for for our job, for our trade of what we do. Guys, have a wonderful day, and I'll see you guys tomorrow.